South Africa's budget deficit will narrow at a slower pace in the coming years than October estimates predicted. That's according to a Reuters poll. Experts believe this is due to poor mining tax receipts. The view of those polled is that the consolidated budget deficit will narrow to 5% of GDP in the fiscal year that begins in March. This is 0.4 percentage points less than previously thought in National Treasury estimates. Further delays are expected in following fiscal years, with deficits narrowing to 4.6% and 4.2% of GDP for the subsequent 2 years from government estimates of 4.2% and 3.6%. South 32 has approved a $2.1 billion investment for its Taylor zinc-lead deposit in the United States. The development is the firm's first mine at its Hermosa project in Arizona, which is a key growth pillar for the company. First production from the mine is expected in the second quarter of the group's 2027 fiscal year. The announcement comes alongside the release of South 32's interim results. For the 6 months to end December, underlying earnings plunged 93%. The group says this was as a result of lower commodity prices and declining output at its flagship Illawarra metallurgical coal project because of 2 planned longwall moves. Given the profit slump, an interim dividend of 0.4 cents has been declared. That's significantly down on last year's payout of 4.9 cents. Coca-Cola Beverages Africa's JSE listing is still on the cards. The firm says its incoming CEO Sunil Gupta will lead its delayed mega initial public offering. Gupta is currently the CFO of Coca-Cola's Bottling Investment Group, which manages the group's bottling network. The group says while unfavorable market conditions delayed its IPO, it still plans to complete that transaction, and this will be at the top of Gupta's to-do list when he takes over in April. MC Mining's rejected a takeover bid. The junior coal miner has rebuffed a proposed buyout offer by a consortium of investors, labeling it opportunistic and saying it undervalues the potential of its assets. The consortium, represented by Goldway Capital Investment, already holds 64% of the shares in MC Mining. And earlier this month, it offered to buy out the remaining shareholders. The deal, if passed, would result in MC Mining being delisted from the JSE, as well as stock exchanges in Australia and the UK. Today, MC Mining urged minority shareholders to reject the proposal. Blue Label says it expects earnings to surge. The fintech group has forecast interim headline earnings per share of around 45 cents. This is a jump from the 2 cents reported in the prior period. More detail will be available when the company opens its books on the 22nd of February. Foresight expects its annual profit to surge. The technology group says its headline earnings per share will more than double to just over 5 cents. It hasn't elaborated on what's driven that performance. Foresight will release its results next week. Further afield, Britain's economy has slipped into a recession in the second half of 2023, creating a tough backdrop for Prime Minister Rishi Sunak, who has promised to boost growth ahead of an expected 2024 election. Let's take a look at this package report for more of the detail.
Britain's economy fell into a recession in the second half of last year. Official data released Thursday showed gross domestic product contracted by a worse than expected 0.3% in the 3 months to December. That follows another decline over the period between July and September of 0.1%. Britain's Office for National Statistics said the Q4 fall in GDP was the biggest since the first quarter of 2021 in the depths of the health crisis. It further indicated manufacturing, construction and wholesale sectors were the largest contributors to the decrease. The country's economy has stagnated for nearly 2 years, though the Bank of England expects it to pick up slightly in 2024. Thursday's data was not good news for Prime Minister Rishi Sunak, who has promised to boost growth ahead of an election expected this year. Finance Minister Jeremy Hunt said there were signs the British economy is turning a corner. He also argued authorities must stick to the plan of cutting taxes on work and business to build a stronger economy. Media reports said Hunt aims to cut billions of pounds from public spending plans. He wants this to fund pre-election tax cuts in his March 6th budget.
And Airbus has unveiled a special dividend after posting higher 2023 results, fueled by robust airplane orders and higher deliveries. Here's more of the detail.
Airbus is enjoying the benefits of a surge in orders. The European aerospace giant said that core profit rose 4% to around $6.2 billion over 2023, with revenue rising even more strongly. It's now projecting profit of up to $7.5 billion this year, and it's set to reward shareholders with a special dividend. Airbus is riding a wave of orders from airlines that are recovering from the global health crisis. That's helping it to build up cash reserves, in contrast with US rival Boeing, which has been buffeted by a series of problems with its 737 MAX jets. The European firm is now projecting 800 aircraft deliveries this year, subject to there being no new disruptions to global supply chains. It did, however, announce a delay in the entry into service of one new model, an extra long-range variant of its big-selling A321. The company's space business isn't going so well. Airbus said it would take a fresh charge of more than $200 million over the troubled unit. It has faced fierce competition from US rivals and a new generation of low-cost satellites. Reuters sources say Airbus boss Guillaume Faury has told staff that charges taken by the space business are not acceptable.
And according to recent statistics, China has remained Germany's biggest trade partner in 2023, with a foreign trade volume of over 253 billion euros. Here's our reporter Dowling Lachela with greater insight on ties between the two countries. Dowling.
Well, Zinati, interestingly, China has been Germany's largest trade partner for an 8th consecutive year. But there are some changes in the ties between the two nations as the global West continues to de-risk from Beijing. Let's cross over to Berlin now, where DW's Chibonda Chimbelu is standing by with more of the detail. Chip, thanks for joining us today. Now, as we get started, take us through the kind of trade trends that are currently playing out.
Thanks for having me. Well, China was Germany's #1 trade partner in 2023, and that was the 8th year in a row. But there are some changes. Last year, foreign trade between Germany and China reached 253.1 billion euros. Now, that is only slightly ahead of trade with the United States. The margin by which China leads has narrowed to only 0.7 billion euros from 50.1 billion euros in 2022. And because of that, Germany's trade deficit with China declined from the record seen in 2022. But the trade deficit remains above 50 billion euros. And Asia's biggest economy, China, remains the leading source of imports. However, the United States is once again the leading destination for German goods. Exports to the country rose slightly. And when it comes to goods, it is vehicles and car parts that are Germany's biggest exports and imports as well. The German auto sector exported more goods last year than it did in 2022, but things could be different this year.
Now, taking that sector into account, how could this year turn out for Germany's auto exporters?
Well, much like the news on the German economy, the outlook is not looking great for the auto sector. On Wednesday, German auto parts maker Continental said it will slash more than 7,000 jobs in its struggling auto unit to cut costs and make the business more competitive. The company is trying to make itself more efficient as it deals with a transition to electric vehicles. And Germany's biggest car maker, on the other hand, Volkswagen, is considering withdrawing from Xinjiang in western China. The auto manufacturer has already faced criticism for its operations there because of allegations of the potential use of forced labor of the Muslim minority Uyghurs. And this week, the German business daily Handelsblatt reported on fresh allegations. Now, Volkswagen has said it wants to intensively examine its joint venture in Xinjiang.
Before I let you go, what can we expect from German-China trade moving forward?
Well, despite the news from Volkswagen, the figures show that German firms are investing more in China. Last year, foreign direct investment from Germany to China rose by more than 4% compared to 2022. Now, that's according to data from the German Economic Institute. German firms invested 11.9 billion euros. So despite the rhetoric that we've been hearing about de-risking or decoupling from China, the numbers are telling a different story. They show that German companies are still very much invested in continuing to do business in China. The future Germany-China trade relations will probably depend on decisions in Brussels and Beijing. For instance, last October, the EU started a probe into Beijing's subsidies for Chinese electric vehicles. And this week, we heard that Brussels saying that it may sanction 3 Chinese firms for aiding Russia. Now, if EU-China trade tensions worsen, so could the environment for German firms doing business in China.
Thanks for your time and those insights. That was Chiponda Chimbelu from Deutsche Welle.